Hey, good morning, traders. This is Abdurrahman from FXAlTareeq, and I got a couple quick questions from one of my mentor clients, Chris, and he's asking me about the bin trades that I did in the what's on my Forex radar yesterday. First of all, let me just show you guys something quickly. I think that I have a pretty good handle on these bin trades and most of the naked price action trades, if not all of them. Here I have an 82%, 88.9% win rate. I've only lost 2.8% and break even at 8.3%. Over 36 trades on this particular one. Start off at 10,000 in the bank and ended up with 60,000. More than tripled the account with 32 trades. So with that said, and I have other stats on the bin trades as well in the high 80s. The bin trade is one of my favorite trades, and I got a real good feeling. And the only way that you guys are going to get a good feeling about the bin trade also is to do it, back test the heck out of it, and see what happens. Here is the Aussie dollar trade, the weekly trade, which I talked about, and we had this double top or moolah trade. Now what I like to do, and the reason I held off on this one was because of one of the Asian session of yesterday, and also what's going on with the FMOC. So one of the things about trading is about being patient, about laying, as I wrote in the article, about laying your traps and waiting for the prey to come and not chasing after the particular trades. We know where the traps are. We know what we're looking for. We're just put in a position to see what we're going to do. So Monday we had a retrace up off of the bin candle that was sitting there. It's not the best of the bin. It could have been a little bit lower. What I would like to see is to have breached the support and resistance level at 0.7172 and enter into that trade. Today is another day. It's a good day for me to be able to decide whether or not I'm going to enter in this trade. And here's the catch with this issue. Had this not been the FMOC interest rate hike, potential interest rate hike deal, I would have probably already set my order in on this one. And we've already discussed that this candle is higher than this particular candle here, and it's a good setup. My only concern about this particular trade and all the trades that are going to happen in the next 24 hours or in the next more than 24 hours, the next day or after the FMOC release, is stop losses, getting triggered on stop losses on candles because of the monkeyness that people play with the candles. So that's the reason I held off on that one. This is also the reason I held off on this one. This is a nice trade here, by the way, with the Great Britain and the Aussie. So this trade is also it's ripe, it's ready to go. It's ripe and ready to go. Here's the issue: 888 pips, 888 pips. 780 pips, and this is not one of the better of the two. Which was the other one? This one here, the Aussie Japan. Nice trade, ready to go, ready to pop. I'm ready to put my order in also on this one. Again, would have loved it to be up here. The issue is how the market is going to react will determine when and how I'm going to put my order in, and it's when you guys have to have a gut feeling on things, and the only way to get that is through experience. You got to get through the losers to get to the winners, to have a feeling as to what's going on these trades. That wasn't one there. Right there. I think those were the only two that I was basically looking at for a trade. The Aussie Japan. Chris is also asking about that, but he's asking on this one on the 4-hour chart. And you guys, I love these questions because these are thought-provoking questions and on how we're going to get in the trade. Here's the deal with the Aussie yen trade. You have this candle here. This is not a kangaroo tail because it hasn't closed in the last 30% of the candle. So with that said, that's a disqualifier. It's a pseudo kangaroo. You can call it a pseudo kangaroo if you want to trade those. You have to go inside and see how you are with trading them. And I like them. Don't misunderstand me. The issue is this candle here did not push up high enough. this, you would want that open and close up here and a higher tail. For me right now, there is no naked price action catalyst for this particular trade. It looks good on my chart. Your chart may be different. On my chart, there's nothing for me to trade in on this one on the 4-hour chart, and there is nothing for me to trade in on the, let's go down to the daily, because you can't just go to the daily time frame on the same chart. There's nothing here on the daily as well. There's no price action here on the daily as well. So with that said, the only price action that you would see is this candle here, and it's not even an Acapulco because this didn't extend past the 86.68 level. So for right now, Chris, there is no trade that I like. And just 1 second, I'll put you on pause for a second. All right, guys, I had to upload the Singapore Japan chart. Chris was looking at this off from a weekly perspective, and here's what you have here. You have this bend candle here, boom, right here. It just fell and went right inside the box. So effectively, you're back into consolidation box trading inside here. Here's the point in analyzing this particular trade. Yeah, you have an Acapulco and you also have a bend. You have an Acapulco and a bend, but let's take a look and say let's put our stop up above the high of this particular candle, somewhere midpoint here. On the Acapulco trade, you have a 210 pip risk reward, 210 pip risk reward, quickly running through this one, and then you're going to get popped out here at 130 pips, 144 pips, and maximum 166 pips off of that particular trade. So from the Acapulco, no go. If you look at it from a bend perspective, 322 pips entering into the trade. Let's make it a little bit easier. This, to be realistic, you'll probably be somewhere around here. Stop loss up here, 323 pips, and you're getting 150, 160. I say no go. Wait for a better trade. Again, you don't have to trade everything that you see, but you do have to trade things that's going to give you a good reward or return on your investment. This trade will be a no good for me. It may be if you want to scalp, fine, but if you want to run it as the way the trade should be ran on a bend trade, this candle actually went too far. You're back inside the box. The risk reward is too low. I say no.